Hello world, this is H.L. Quist and I am the Mythbuster, and is there big news today? You know what's happened? Our inflation genie has hooked up with the deflation devil. Wow, what a reversal. And that's the topic of our discussion today, is suddenly these deflationary forces or a contraction are showing up in the economy. You know, recently, and in fact for 14 or 15 months, we've been talking about inflation, the good inflation. We've had asset inflation, we've had growth economy, and of course that's all been positive. And the Mythbuster has been very bullish about what's going on in the marketplace. But suddenly, all of a sudden this changes, and it was only last time we talked about food prices and commodity prices, rubber going up and vegetables going up over 50% over year. What's happened that suddenly changed this? Well, let's first look at the global picture, because that's had a great influence on what's happening here in America. Let's look at China. China has hit the wall. They say that inflation is 10% in China, when it's probably twice that amount. And what we're going to see there, they overstimulated the economy, and what we're going to see is a correction starting to take place. The real estate market there is just, they got a bubble, it's going to implode. And it also affects Australia. Australia is the #1 export customer to China. And Australia, believe it or not, has got a housing bubble greater than ours. And with these exports and the economy starting to turn down there, that market has already started to implode. And we've talked about Greece and Euroland and what's going on there. Well, what's happening is that the people, in particularly in Europe, realize that this whole program, and they've been this illusion that they've been living, the socialistic illusion for years and years and years, is coming to an end. Last week, 7 billion euros flowed out of the country. In other words, particularly the French and the Germans were converting their euros to Swiss francs and to gold. Now, what does this tell you? And I could go on and give you several illustrations, but ask yourself the question, looking at this picture globally, is there any area of the world that isn't experiencing unrest and economic stress and turmoil? Even in Jamaica, the most laid-back people I know of, when I was there, they're suffering from, of course, it's the drug lord and the chaos in the streets and everything else. You would never expect that. Civilization is hanging by a thread, ladies and gentlemen, and it's coming unraveled. But let's look at the United States. What are the indicators that I look at that tell us that we're in a slowdown or a deflationary economy? Disinflation is occurring. Well, the American Association of Independent Investors, AAII, and I've spoken to that group some time ago. These are independent investors who manage their own money. The sentiment now has turned bearish. They're generally very bullish, and they look to make a living from trading in the market. They've turned bearish. And also want to point out is the outflow of money from mutual funds into bonds in particular. And look at the 10-year Treasury note. Not too long ago, maybe 6 weeks ago, the rate was 3.90%, and it was factoring in an inflationary trend that was starting to accumulate along with the prices of these commodities. Now it's at 3.25%, and it's signaling, of course, a cyclical change. One of the most astute gentlemen in this country is Richard Russell. Richard, if he isn't 88 or 89 or 90, I mean, he's topping that. Anyway, Richard was around during the Great Depression. He writes the Dow Theory forecasts, and he called this recently, he just called for a summer reversal in the markets. Now, Richard is not inflammatory. He doesn't do these things to just speak out and gain attention. He doesn't need that. But I put a lot of faith in what Richard has to say. He sees a surprise. He called it a summer surprise and a reversal in the economy. And the economic cycle research. Now, these are guys that I get a lot of numbers from, and I want to go back to the spring of 2009 when everything was looking so bleak. The economical cycles research said that the indicators had, this whole broad bunch of indicators had indicated a uptrend and that the economy was improving. Well, based on that, I got back in the stock market on April 1st of 2009, and look what's happened. Even just stodgy old mutual funds have gained 50, 60, 70% in that period of time. Of course, they're leveled out now, and we've had some volatility. The other big thing is that M3, you remember that this was a statistical number that the Federal Reserve used to publish. They discontinued that 5 years ago because they didn't want us to know what the money supply was. Well, recently, an economist from Great Britain was looking at, and he got the numbers out. The M3 is the checking accounts, savings accounts, CDs, the money in circulation. Tells us a lot about the velocity or the turnover of money in the system. He says, this gentleman from Great Britain says, that there has been a sudden slowdown in the velocity in the M3 of money. He says it's down 9.6% in the last 3 months, which is highly disinflationary. Really a very critical statistic. Also, we know, and we've talked about the smart money. These are the hedge funds and the people that invest large amounts of money, and they have abandoned the pro-growth, highly leveraged trade based on, an improving economy and good inflation in the economy, and they are going to cash and to gold. So what does that tell you? It's the smart money that started this market going back in March of 09, and they're now getting out of the market and out of their leveraged trade. So we are at a turning point, ladies and gentlemen, and this is the hookup between our inflation genie and the deflation devil. What an odd couple, right? Well, here's the irony in this whole thing. How can you have inflation and deflation at the same time? Here's what I see that probably people haven't grasped yet. If the economy indeed is slowing, and I believe that these experts are right, is that by the midterm elections as we get into September and October, I believe this administration will panic. And they'll come up with all kinds of spending and new programs. The Fed will start printing money. And of course, what's the natural outcome of this? Inflation. In fact, they've created a perfect, or the groundwork for a perfect storm, which would be inflation, deflation, or an inflationary depression and the potential for hyperinflation. Well, we certainly hope that that doesn't happen. But I wanted to alert you to this because of this major change. What I'd like you to do is to review my Contrary Market View newsletter, which is free to you. Go to my blog site. You can respond to me on this YouTube video, and I'll give you the address and everything. It's I can't go into it, it's too darn long. Or you can email me at hlquist@cox.net if you'd like to. I will give you 2 free books if you'll subscribe to my newsletter, which is $99 a year. I think that you need this information. We are at a turning point, and stay up to date. Until I see you again soon, this is the Mythbuster signing off. Bye-bye.